Hello and welcome to another edition of Islamic Finance Weekly, where we discuss and give incisive analysis on the non-interest finance market and its benefits. Since 2004, the reform of Nigeria's pension system has led to its significant growth in 2 decades, and we are talking about contributory pension assets now valued at 12.9 trillion naira. The pension reforms has been described as one of the best since Nigeria's return to a democratic dispensation in 1999. Today, we'll be looking at Islamic finance and the Nigerian pension industry, as it is very important for the financial and capital market ecosystem. Joining me to discuss this is Dr. Abubakar, a lead consultant on Islamic finance at ANUTI Ethical Consulting Limited. Good morning, Dr. Adam. It is good to have you on the program.
Good morning. Thank you for having me.
It's my pleasure. So, Dr. Adam, in 2004, Nigeria pension industry reformed its pension scheme, moving from pay-as-you-go to a defined contributory pension scheme. Tell us what we should know about pensions in Nigeria, some facts and issues Nigerians should be aware of.
Okay, thank you. Good morning, our viewers. Actually, as you said, 2004 was considered as a turning point in the history of pension in Nigeria. The history of pension system in Nigeria was characterized with many problems, which include unsustainable pension liabilities, lack of adequate and timely budgetary provision, increase in the number of the employees, poor implementation of pension scheme, particularly in the private sector, as well as the inadequate supervision and regulation, among other problems that the industry in general was characterized with. So these problems necessitated a reform in the Nigerian pension sector, which eventually gave birth to the Pension Reform Act of 2004, which was copied from Chile Republic in Europe, which established a uniform contributory, private sector managed and fully funded pension system for both public and private sector in the country. So the Pension Reform Act of 2014, as amended, provides that pension funds should be managed and invested by registered pension fund administrators, and the money should be warehoused by the registered pension fund custodians under the close supervision of the Nigerian Pension Commission as regulator, which is Pencom. Therefore, the system is having about 3 tiers. That is the regulator, Pencom, the administrators who are the PFS, which we have about 22 registered now under Pencom, and the custodians who have the warehouse of the funds. Then the system also provides that both the employees and employers in the public and private sector are to contribute a minimum of 8% and 10% respectively. That is 8% by the employee and the 10% by the employer of their basic salary. This will give a total of 18% of the basic salary of the workers' emolument. The PRA also provides that pension funds should be invested through some instruments of investments that are registered and recognized by the Act, which includes bonds, treasury bills, debentures, shares, and other debt instruments issued by registered corporate entities. So this is the system that established the contributory system, which ensured the migration from the then BDC, that is a contributory, from the then defined benefit to the current defined contribution. Currently in the country, we have about 22 registered pension fund administrators and over 5 registered pension fund custodians, with a total asset value at more than 11 trillion, according to the recent report released by Pencom. So this is the general overview about the new or the contributory pension scheme that has started since 2004 after the Pension Reform Act 2004. Thank you.
All right, Dr. Adam, thank you for taking us through the importance of pensions, the facts we should know about it, operations, and the services. Now, talking about the Pension Reform Act 2014, they established a body called the National Pension Commission, which you've said, in order to enforce and administer the pension regulations. How will you describe the management of pension funds in the last 2 decades of the reforms?
Actually, as we earlier highlighted, that the National Pension Commission, which is Pencom, is the regulator of the pension industry in the country. As we have Central Bank as regulator of all banking sector, we have Nigerian Insurance Commission, NICOM, as the regulator of all insurance industry in the country, as well as the SEC for the capital market. So we have Pencom as the regulator. And throughout the 2 decades, or about 2 decades from now, since 2004, when the PRA 2004 was enacted, the Commission has really tried a lot in transforming the pension sector, pension industry in general. As we all know, there are 2 different types of pension. We have what we call DB, defined benefit, and the DC, defined contribution. So one of the major achievements recorded by Pencom is to ensure the actual transition and immigration from the then defined benefit to the current defined contribution. And along the line, or throughout this period, the Pencom has really tried a lot in establishing a robust legal and regulatory framework for the industry, where so many guidelines were issued, so many frameworks were also established. It also introduced, since 2008, what is known to be as multi-fund structure, which has many benefits. That multi-fund structure includes the recent development of the micro-pension, as well as the topic of our discussion. It also gave birth to the Fund 6, which is the actual ethical fund or non-interest fund. So these funds that were established under the pension, the multiple structure, it also as well established, as I said earlier, the non-interest segment. And it also recently releases the guidelines for the management or for the regulation of Fund 6. That was somewhere around June this year, 2021. And prior to that, they released the guidelines for the management or regulation of the micro pension system. And many more achievements were achieved by the Commission. And this is just to mention but a few. Thank you.
I agree with you. The pension assets in the country have contributed phenomenal growth in the country, but there are still a lot of work needed to be done from the grassroots. So the multi-fund structure was introduced by the National Pension Commission, that is the Pencom, in July 2018 in order to achieve optimum returns for contributors by aligning their pension savings with their individual risk or return profiles. So what are the benefits driven from this structure?
Yeah, actually, as I just highlighted, that one of the achievements recorded by the Pencom is the introduction of the multi-fund structure in July 2018. That also has so many benefits. It enhances the safety of pension assets through adequate portfolio diversification. It also allows RSA holders to have more control over how their pension funds are invested based on the risk tolerance, because it establishes about 6 different funds as we're going to see the funds. It also gives room to accommodate demands by RSA holders for the opportunity to invest their retirement savings in the non-interest and ethical instruments, because there were so many agitations by some RSA holders on their faith background that they don't want their RSA balance to be invested in purely conventional assets, which has interest and the other implications from Sharia point of view. So this multi-fund structure has given birth to the current or the new development in the industry, which is the Fund 6. Beside the Fund 6, there are other funds that are established by the multi-fund structure. The first fund is called Fund 1, which is for the contributors that are below 50 years old. So they can choose to be here by choice. But if they don't want, by default, they're supposed to be in Fund 2, which is known as the default fund for the contributors that are below 50 years old. So the contributors may wish to go back to Fund 1 on their choice, but by default, they are registered under the first fund. The third fund, which is called Fund 3, is the default fund for the contributors that are 50 years and above, who are still in the active service. So these are the first three funds. The Fund 4, which is also part of the multi-fund structure, is the fund reserved specifically for the retirees. The retirees who are not in active service, they are to register by default in the Fund 6, Fund 4. Then Fund 6 is specifically for the micro pension plan, while the Fund 5 for the micro pension plan, while the Fund 6 is for the non-interest fund, which is the actual ethical fund. So these are the 6 funds that are established by the multi-fund structure. As I highlighted, it has so many benefits.
Recently, in June 2021, the National Pension Commission introduced a non-interest Fund 6 and issued an operation framework on it to pension contributors and retirees. How will this contribute to deepening penetration in the pension industry?
Yeah, as you just highlighted, that there has been increasing demand by RSA holders who are the contributors in the Contributory Pension Scheme for the opportunity to invest their retirement savings in non-interest and ethical instruments that are in line or that tallies with their path base. So this led to a series of engagements with other financial regulators and stakeholders towards creating a non-interest fund, which is based on principles of Sharia. Yes. So in order to cater for the need of this category of RSA holders, earlier to this, the National Pension Commission, Pencom, had also in 2019 issued regulation on investment of pension fund assets, which recognized the government sukuk as one of the accepted classes of assets for the pension funds investment. So in June 2021, Pencom released the operational guidelines for the non-interest framework, which serve as a formal approval for the long-awaited ethical fund to start in the country. And the Sigma has become the flag bearer, the Sigma Pension, to be the first pension fund administrator to launch non-interest savings, retirement savings account with their customers. This really has so many advantages in deepening financial inclusion in the country, because in Nigeria, the rate of financial exclusion is estimated about 37%, according to some researches, with large exclusion observed in the northern regions, largely on ethical basis. Many people were financially excluded on ethical basis. So the introduction of this non-interest fund will really assist in deepening financial inclusion, and it will also a long way in boosting investment in the non-interest finance sector of the country, considering the large number of the people who have tasked for the non-interest fund in order to invest their money. So it will also stimulate voluntary contribution, as you know, that the system, the contributory pension system provided for voluntary contribution by RSA holders. Beside the 18% employee and employers contribution, employees may decide to add additional voluntary contribution to their retirement savings account. But many of them cannot do it because even the mandatory one, they were forced to because of their ethical background. So having the non-interest fund on ground will really deepen the financial inclusion and will raise the other real sector of the economy.
Okay, we've been talking about the operation of Pencom towards the pension funds in Nigeria. Has this fund been managed effectively? Talking about the income for the account holders.
As I say, the Pencom, as the regulator, has really tried a lot and recorded so many achievements in supervising the pension fund administrators, the 22 registered pension fund administrators in the country. They have their own limits of transaction through each and every instrument that are there, which was established by the financial regulations of the pension, as it is also been emphasized in the recent guidelines issued by Pencom for the management of the non-interest funds.
All right, so what additional opportunities does the introduction of non-interest fund 6 create in the non-interest financial sector of the economy?
Indeed, there are so many additional opportunities that the introduction of the Fund 6, which is the non-interest fund, will be created, which is going to be created by the introduction of this new fund. In Nigeria, we have a robust legal framework for Islamic finance in the country. Yeah. Even around the world, in Nigeria, even though joined recently the Islamic financial market or financial industry, but it has one of the most robust Islamic finance legal framework. One of the testimonies to this is the recent amendment of the CBN Act, which categorically recognized a non-interest banking and made about 4 different provisions related to Islamic finance, even in the Act. So there is also another opportunity that has to do with the synergy and support between all regulatory authorities, such as Central Bank, the CBN, the Securities and Exchange Commission, SEC, and the National Insurance Commission, NICOM. So there is this synergy between these regulators together with the Pencom as the regulator of the newly introduced Fund 6. Besides this, there is also another opportunity for investments or creating more investment portfolios, because there is thirst for non-interest financial services in the country. Considering the rapid development of all the 3 key sectors of the Islamic finance, the banking sector, you see very recently we have about 2 banks coming on board in less than 2 years, Taj Bank and Lotus Bank. The recent oversubscription of the sovereign sukuk of FGN, particularly that of 2020, which was oversubscribed by about 450%, and the rapid growth in the mutual funds, which is also seen remarkably in the capital market. All these will assist in deepening or in creating more opportunities for the non-interest fund in the pension industry. Another opportunity for that is that it will stimulate the state contributory pension scheme, because it has been observed that many northern states did not key into the contributory pension scheme. They remain under the defined benefit system, which the federal government has migrated from it for the past 17, 18 years. But most of states, particularly in the north, are still under or operating under this scheme. So this will really give them another opportunity to come into the pension industry or contributory pension industry, because the delay in the introduction of this state contributory pension scheme mainly is on the ethical grounds. So the introduction of Fund 6 will also go a long way in creating or in deepening or participating or inclusion of the state contributory pension schemes across the states, particularly in the northern part of the country. Exactly. The last but not the least, it will create more employment opportunities, particularly in the Islamic financial sector, because many professionals or the services of many professionals in the Islamic finance industry in the country, their services will be required by each and every pension fund administrator, and even at the level of the regulators. These are some of the opportunities, just to mention but a few. Thank you.
Definitely, Dr. Adam, Islamic Pension Fund will provide an avenue for financial inclusion and employment opportunities, as you highlighted. Thank you very much indeed. It was an interesting session with you, and thank you very much for taking out time to speak to us this morning.
Thank you once again, and I also appreciate the Web TV and ProShare for inviting me and giving me this opportunity to share my thought on this development in the Islamic financial industry. Thank you for having me.
You're welcome. Have a nice day.
Thank you.
Bye. Despite the growth in pension assets, Nigeria still needs to deepen penetration in the market. Islamic finance provides immense opportunities for achieving this, especially through micro-pensions. And that brings us to the end of today's session. Visit www.proshareng.com to read more on Islamic finance. Click on Web TV banking channel to watch our weekly videos. You can also follow us on our social media platform displaying on the screen. Many thanks to all our viewers for watching and following the Islamic Finance Weekly. Please stay safe and enjoy your weekend.